By far the number one question we continue to receive every single day for the past few days is how much lower does the stock market have to fall in the near term, particularly the mega cap tech stocks, Nasdaq 100, Apple, Microsoft, and so on and so forth. And of course, these are important questions considering how heavily weighted these stocks are. The short answer is that we think they can go quite a bit lower due to the imbalances that we've been seeing in the options market. So we're going to go through these and show you the levels that we're focusing on and in what time frame we would expect these targets to be reached. Before we go into that though, I want to just take a quick minute and let you know that it is that time of year again for the Wealth 365 event. This is by far the largest and most spectacular online trading and investing event. I will be speaking there once again as well in October. The event is October 12th to 17th. I would highly encourage you, and I really mean that, if it wasn't a good event, A, I wouldn't be participating, and B, I wouldn't be encouraging you to sign up. It's completely free. You're going to get a ton of free stuff when you sign up as well. Strategies, ebooks from all over the place. Amazing strategies, amazing speakers. I always listen to many of the presentations, and as I always say, I always learn quite a bit as well. So I would highly encourage you to do that. The link to sign up for it is down below in the YouTube description, or if you're getting this by email, it is in the email. So please do that. Do yourself a favor and really join that event. It's a tremendous amount of information that you get. So having said that, let's have a look at the indices. And I think we're going to start very simply with the Nasdaq 100. And the Nasdaq 100 as of here right now, as I'm recording this, has essentially dropped roughly about 10%, give or take. It's sitting at a very simple technical support level, which is referenced by its 50-day moving average, which is not all that important in all else being equal, but because of a lot of algorithms and things focus on it, it does have importance. We think that considering where some of the major constituents of this are trading, that there's probably at least another 5 to potentially 10% lower from here. So very specifically looking at the Nasdaq 100, I would imagine we would be able to get the Nasdaq 100 closer towards the mid to high 250 area. So that's roughly here. That was also support back in July. And if that doesn't hold, then I think a full retracement down to the breakout area of June, when the Nasdaq broke to, or the Nasdaq 100 broke to new highs, is absolutely not out of the question. And I do think that would be within the context of a healthy corrective move. So again, first target be another 5% lower, maybe in the mid, again, somewhere in maybe even the low to high 250s. Again, volatility is higher, so we have to get ranges, and then possibly I would give it probably at least a 30, potentially 40% chance that we see a full retracement this year down to 240 on the QQQ. I will say one more thing, and I'm going to go a little bit out on a limb on this, but I do think that the top for the Nasdaq 100 has been put in for 2020. That does not mean that I'm expecting a major stock market crash from here on forward, but the amount of upside calling, the call buying frenzy that we've all heard about now for the past few weeks has been extreme, at least certainly by within the context of which I've been looking at the markets for the past 22 years. So that's the Nasdaq 100. More specifically, maybe let's have a look at the big one here, the Apple. The Apple too, if you take it from the peak to this thus far low, has dropped about 18%. So that's almost twice as much as the Nasdaq 100. But of course, a single name equity can fall more. I would not at all be surprised if we see Apple fully retrace the basically the post earnings exuberance and get the stock back down towards about the 100 mark. I would probably give this about a 30 to 40% chance probability. I would expect a much higher probability to be for Apple to correct another maybe 5, a little bit more percent towards about 105. So what tends to happen is, of course, if you think about this through the lens of probability measurement, is the further away the target is, in this case the downside target, the lower the probability is of it reaching. So 105 and then possibly down to 100, which is a round number. And again, I would not at all be surprised for that to be reached. Let's look at maybe one more, and we could go through a lot of them, but I'll just pick on Microsoft. I think Microsoft is a little bit, and I hate to say easier because it's never easy, but it's maybe a little bit more feasible for a lot of people to see that this stock might retrace another 10% down to its breakout point from June, so down to around the $190 level. Would not at all be surprising to see over the course of the next few weeks. Now, I will say one more thing, and this is really, really important. A lot of this, if not all of it, does actually fortunately or unfortunately depend on the Fed. We've seen the Fed step in time and time again after equity markets corrected even just a little bit, and it would be somewhat surprising if it didn't happen again this time. So if we see the Fed come in with some very supportive moves, one would have to at most take these first or more conservative targets that I just laid out in the Nasdaq 100, in Apple, and in Microsoft. So those are the targets that we're looking at. Again, I would highly encourage you to join Wealth 365. It's an amazing event, October 12th through the 17th. I will be there. We'll talk about a strategy that we use to trade these more volatile markets as well. So you'll certainly be able to hear from me as well. In the meantime, hope you guys all stay safe and healthy. And again, sign up for Wealth 365. It's down below in the YouTube link or in the email that you receive this in. Take care.